Welcome back to Kryptolytix, giving you a fresh take on crypto analytics. Today, we're going to resume the day trading series. So this is episode number 2. This one I've just called the Divergence, but it's kind of probably more so like a price action divergence. So let's jump into the handy slideshow so I can basically show you an example, the rules in order to enter the trade with this particular strategy. And let's dive into the charts after that to show some examples of how this works. I'm going to try and keep this one short so you can dive into the charts and start backtesting yourself on your favorite ticker. Today I'm going to use Solana. I trade Solana pretty much every day because I look at the charts for it every day in all sorts of different sessions, as in time sessions, Asian session, London session, New York session, and I have many different strategies that I like to use on Sol depending on the session. But I'm going to try and keep it a lot more simple right now because I'm going to start off with the basics. For me, I spend hours and hours and hours and hours a day looking at the charts. So me developing these strategies is me attempting to hopefully give some alpha to anyone out there who doesn't have the kind of time that I do to be staring at charts all day. But with a lot of this stuff, you're better off figuring out a strategy that works for you and then eventually moving to only trading within a certain period of time throughout the day rather than spending your entire life in front of the chart. Maybe an over exaggeration for me because I do spend a lot of other time doing other things, but I do admittedly spend an insane amount of time in front of the charts, so it is what it is. So let's get into the presentation and let's go from there. Okay, here we are once again with the Market Cipher scalping strategy presentation. So yeah, let's just quickly go through. Again, this is not financial advice. This is for edutainment purposes. I just guess I'll steal that one from James from Invest Answers. Education and edutainment purposes only. Yep, just so you remember, this strategies are designed to help show some of the potential ways we can try and develop a strategy to take advantage of small moves on lower time frames. In this case, we're talking about the 5-minute time frame. Do your own backtesting and research and make sure you use the bar replay when testing a strategy so you can't see the future. Now that's also kind of important as well because it's all well and good to be like, yeah, I would have taken that. Yeah, I would have taken that. But a lot of the time it's just like, well, would you have? So sometimes it's better to do the bar replay so that way you can actually take the trades. But if you're very robotic with it and you just take each one and adjust your risk according to the current trend, then overall you'll probably be okay. But again, it's up to you guys to work with this and make it work for you. I'm just showing you some examples, and then just the idea is to use this and I guess go and find a ticker that it works on really well for you. And just remember, investing carries risk. Well, this is not really investing, is it? This is day trading. Make sure you can only invest what you can afford to lose and isolate trading accounts to make sure that you don't ruin your entire portfolio if you make any mistakes. And I covered on the first episode a lot of this stuff, but I just thought I will have to cover it on every episode just in case anyone new has stumbled across this and hasn't seen the previous video on the 3-div chain. So just to remind everyone, the Market Cipher elements has the wave trend, which is this little thing here. That's just an oscillator that basically shows you where we are at in the current price action or this price move. For example, the dots and divs, as you can see, I've also called it divs here. And those are the little dots there and the divs. And the stochastic line, which is this blue/purple line here, which shows you trend exhaustion of the current price move. And then the EMAs, which is right here on the chart example there. So, you know, for example, in this very short time frame, which is a 5-minute, if this is blue, it means it's bullish. If it's gray, it means kind of bearish at the moment. Probably better to zoom out a little bit to see kind of where things are more so. It's a lot easier just to actually look at the price action to tell if we're in a bear or bull trend, isn't on the small time frame. But I just thought I'd put that there anyway because that's part of the indicator. Okay, and here we go, divergence trading, and it's like divergence price action. It's like price action divergence, wave trend divergence, but I don't want to overcomplicate the name. So it's a divergence with a higher low swing. So okay, we're going to look at the long example in this video, and then I'm going to go onto the charts and we'll look at both the long and short example. So as you can see here, divergence with higher low swing, long trade example. Okay, so you look to the left and you see if the most recent low was lower than the current low, as in the current little wick down. Because a lot of the way the wave trend works is that when the price action's coming back up from a little dip down, it puts a dot at the bottom of the wave trend. So there will most likely be a low or a wave trend dot prior to it. So I've put here these are rare, but they're actually not as rare as, you know, you would think, I suppose. It just depends on when you are trading and when you're looking at your charts. You enter the position at the candle close with a green dot with divergence. Now, you don't have to worry too much about getting in immediately, because a lot of the time you'll even see on the chart there are re-entry points. So if you try and FOMO in after you've seen this, maybe don't bother, just wait for the next one. And well, I mean, you should never FOMO into a move, to be honest, but you know, just in case you do, just leave the trade entry at where you would normally put it, and basically, or even below if you want to try and get a better entry position, because you'll see on the charts that a lot of the time there is like a slightly better opportunity to get in. I don't know if you could be too greedy, then maybe a lot of time you won't be able to get in at all, or even if you try and participate in like the stop loss hunt that often comes after these as your entry. But I mean, that's pretty advanced. So, and also with those, you don't know where to put your stop loss after. So anyway, let's not overcomplicate this. So set your stop loss to the wick of the previous structure or swing low. Now, I'll cover this in a little more detail, but I like to put it a little bit further from the wick. And while that does increase the risk, unfortunately, it also prevents you from getting stop loss hunted, which is just a constant thing that happens. That can get very frustrating when you have an amazing setup. You've got a really good position, and then all of a sudden, you know, crypto's the worst for this. You know, price will just come back down, take your stop loss, go back up, bill all of your take profits, and then come back down, and then rinse and repeat. And you're just like, it is what it is, you know, this is the stuff that happens. So you take the profit aggressively, 25% take profit at every 1% price move. So you're waiting for like every 1% price move, you're taking a quarter off the table. And sometimes if you're feeling like it's going to be a strong move, and I guess this requires some sort of intuition that we'd need to develop over time, then maybe you can leave the last quarter run. But for this case, we're just going to simply let the 4% mark be the close of our position. And it's up to you what you do with that last quarter. But if you want to leave that last little bit run and then just move your stop loss to risk-free. So it means you kind of have to manage it. For example, if it's taken the first 2 profit points or the first 3, then you just move your stop loss to your entry price, like where you entered the trade, and then basically either let the rest ride and then just like maybe put some profit points in at intervals above. Whatever you want to do, it's up to you, but I'm going to stick to the 1% price moves, taking a quarter of the position until close, essentially, which would be the 4% price move, closing the whole position. Just to remind everyone, this is not a holy grail trading strategy. There will be wins, there will be losses. The idea is that a lot of these losses at least take 1 profit point first, which reduces your risk a little bit because it pushes your break-even price down in the long case or above a little bit more in the short case. And a lot of the time, maybe if 1 or 2 profit points are taken and then it turns around on you, then even if you get stopped out, well, sometimes you get stopped out in profit, a little tiny bit of profit, or you get stopped out at kind of break even or a very small loss. So, you know, and then you will get losses where it's just like, well, that didn't work out at all. But those are less common, and usually during kind of sideways price action, which you find it kind of get a little bit more during the Tokyo session, or Asian session as I call it, which you can find more information about trading sessions online, because I'm in a completely different time zone most likely to you, so I can't tell you the times that it is exactly for you, but there are indicators that you can use to figure that stuff out. But again, let's not overcomplicate things. Here is our chart. So this is very small and I can barely see what is going on, but anyway, this is just an example. So you can see the entry here. There is the dot. So we have a low here, right there. We have a higher low right there. So there's your price divergence and it's following the same direction as the divergence on the wave trend. So there's your long entry, and then basically you rode this whole price move up, and then yep, your stop loss would go here or a little bit below that essentially. And yeah, this is from quite a while ago, this particular trade entry, because I did develop this strategy a while back, but I decided to wait a while and see how it went throughout various different price action and kind of pick up randomly in the future to make sure that it still works. Because with a lot of trading strategies, you actually have to kind of test them for 100 days on a demo account is the recommendation before you can actually take them to a live account. You should probably be doing that anyway, rather than trading with real money, especially to test a new strategy, especially one that someone on the internet's telling you about. I guess in this case, that's me. So let's dive into the charts and look at some examples here. Okay, let's have a look on the charts. So I'm not trading at the moment because I don't want to really trade the craziness of the FOMC meeting. I'm going to try and keep this video evergreen, so I won't really talk about the current macro events that are going on that will be affecting all the crazy price, but it's just a great opportunity for me to work on making this video. So here is the first entry, and remember, the trend is your friend. So if you look to the left of this and you see, well, price is coming down quite clearly. We have, you know, a strong trend line above that's coming down, and we're about below the 200 period moving average, which you can use something like this. Then this is a stronger entry and you're more likely to win it. So I'll go over this particular indicator in a future video. This is an indicator, free indicator from the moving average trading channel, which is great trading, day trading channel, and I highly recommend him. So the entry price was right here, or the entry was right here, which is actually on a horizontal support and resistance line. So that's pretty good as well. In this case, this is one of those examples where putting your stop loss at the range or this area's most recent wick high would have stopped you out. So having it a little bit above, at least, you know, 0.2, 0.3% above is ideal. But what I've done in this case is I took this entry candle right here. So just to preface this, so we have a high and a lower high right here. So, and there is the div going in the exact same direction as the price. So that's your entry candle there. What I've actually done is I have put in a box here, one of these handy dandy measurement boxes. It's actually a date and time measurement tool, this one here, date and price range. And I've drawn it over this entry candle. So usually you can actually see the label, but I've turned it off because it just gets messy. Okay. And this means that the risk is actually 1.21%. But what I've done is I've drawn it over the entry. So in this case, you would probably open your position, or if you really wanted to, you could just kind of wait until it comes back, which often it does in this case. So in this case, you know, say maybe you put your position in there, maybe you missed it. Well, you would have entered on this candle here. So, you know, not a big deal. Or even here as well. In terms of building or laddering in a position, I don't really recommend it, but you can if you really want to. You'll see in other examples it doesn't quite work out and it just compounds losses. But you know, maybe in this case you decided, hey, I will wait for a stop loss hunt at the top of the range, and a lot of the time you'll just get left behind if you do this. But maybe you decide to go in here at the top of the range, and then you have a very good position or entry, and then you get a lot more profit from this particular strategy in this case. But this is just one example. So just remember that there's going to be plenty more examples, and you'll see that it doesn't always pan out this way. But, you know, we are looking at a downtrend, so this is a strong entry. So yeah, by doubling the candle size, so your stop loss is double, the candle size of your entry. And that's how you measure it, by putting this box over there. So you've got essentially, I'll just draw it here so you can see what I mean. You just go, okay, look, there's the bottom of the candle. Okay. If you do it on the candle, you won't be able to kind of see where the candle closes. So let's just zoom right in, shall we? Bit of a crash zoom on this one. I'll just get rid of this from the screen so you can see me trying to measure it up in real time. So you'd put your entry in, essentially. You would enter your trade. Maybe maybe you enter just here on the actual horizontal support resistance line, and you draw those out by zooming out to the 1 hour, looking at where price action has wicked off both to the up and the downside, essentially, and that's here. So you can see it's kind of dancing around this for a while, trying to bounce and form some sort of reversal off this, but obviously that didn't happen. So find the wick, draw it up. There is there's the wick to the upside on this candle, and then you basically just put your stop loss there. So it's a 1.3% risk on this one. But as you can see, it protected you from this stop loss hunt, because if you just did the top of the range here, you've been wicked out and then missed out on this entire move, which would have really sucked, but it happens. And these are 5-minute charts, so you do have a little bit of time to set up everything, so you don't have to really rush into it or panic, or, well, you shouldn't be rushing or panicking anything. You should be definitely taking your time and analyzing things first. But a lot of the time, yeah, 5-minute is pretty fast, to be honest. Not as fast as the 1 minute, but I won't talk about the 1 minute just yet because that'll come in the future. So as you can see here, this is the entry right here on the color close of this candle, or maybe you got in here, as I said before, wherever it was, and your profit points were here, 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 and here if you let it ride. Again, one of these things is as soon as you get to the second profit point, it might be a good idea to then move your stop loss down to your entry. So you see here, like after this reattempted, it's coming down quite clearly. So you got your low highs, lower low formations. So it's safer at this stage. But yeah, crypto often breaks structure and then just keeps going down, and then breaks structure again and then just keeps going down. It's not like foreign exchange where it actually respects structure. No, crypto does not respect structure because it's crazy. So yeah, and if you just let this one ride, I don't know, you would probably want some sort of target if you did let it ride, like the next horizontal support and resistance. So maybe you could squeeze an extra, this is also a Fibonacci as well, extra 1.26% of quarter of your position. So it might not be that much. There's another one here, 2%. So on and so forth. Or maybe you wait for, I don't know, it's up to you where you deem it a good idea to close. It's not often you get these crazy tears to the downside. Maybe you wait for a big divergence, big green dot divergence here, and maybe you close here. I don't know. Again, it's up to you. That's an extra 6%. It's pretty crazy. This is not going to happen that often though, as you'll see in the other examples. So yeah, I mean, that's probably not going to happen very often. These are other entries from a different strategy, so let's just ignore those for now. Okay, so here's the next one. Here's the next one, and we'll look at this one first because this was a failure. This was a long entry. So as you can see here, we got a 3-div chain as well. Unfortunately, this didn't work on both accounts. So we have a low, a higher low. We have a low on the wave trend, a high low on the wave trend, but it's a divergence. So, you know, we're talking about a wick here, essentially. So you enter on this candle here, or if you missed this, then here, I guess. The later you enter, the more likely the trade will fail. Because if it hasn't run yet, then there's a good chance that it won't run at all. So yeah, if you entered here and you put your stop loss, you know, for example, just a low, and again, you're trying to counter trend trade at this stage because you can quite clearly see if you zoom out the price action is forming lower highs and lower lows, and you're trying to catch a falling knife on this one. You're less likely to have success with this, with trying to counter trend trade, but let's just say you robotically take it anyway, or maybe you take it with half of the position size that you would normally use. And this is where proper risk management can be quite powerful, because maybe you do take some risk, but then you're only opening a smaller portion of what you normally would in terms of the trade size. So anyway, let's have a look-see here. We have a entry here, arguably, and the first take profit point was right here, essentially. So that got you a 1% take profit out of this particular move. However, if this wick was just a little bigger, right? If this was just had a little bit more price action in it, that would be great, because that would have been an entry short to the downside, and then you would have got this. But you know, we can't always get this sort of stuff telling us the exact story. So even if you got stopped out here and you saw this, or if you saw this, right? Let's just say you got a contradicting signal. You enter on this div here, and you go long here, and then you kind of miss your first profit point here. Price comes back down, goes back up, but then you see a div chain here, and it's doing the same thing, where just say this price came up a little bit more here, right? And then you got that, but then you're trading with the trend, which is quite clearly to the downside, because the trend is your friend. Yep. Then you kill this, and then you go short, and your short entry would have been on this candle here, which was also a blood diamond, which I don't trade those, but just thought I would mention that anyway. And then you have yourself a tasty move to the downside. So that's an example where you would probably bail from your position if you did open that, and you would have collected, you know, maybe 1%, would have been probably about break even when you decide to flip your trade with actually a very small profit. That didn't happen, so, you know, hypothetical only. Here's the next one. So as we can see here, price action was forming lower highs and lower lows, you know, right here, and the divergences were doing the exact same thing essentially, and this is to the short side again. So just to reverse this, if you look to the left, and then you see that the most recent high was higher, right? That's kind of how you trade it in reverse. And then previous structure swing high. So it's the same concept, just in reverse, especially trading shorting when we are in descending price action. I mean, those are going to be the strongest trades to take. And as you can see here, there was your entry there. If you missed this, you actually didn't get another opportunity to enter the exact same place, but you quite clearly had another spot that you could have got into, I suppose, if you just waited for some sort of move back to the upside or something like that, or you had this candle to get in on, I guess. So, you know, this just kind of shows you that you don't always get another chance to get in. So maybe you missed out, I don't know. You usually have a bit of time, especially if you're putting alerts on. So as you can see, you got your first profit point there, second profit point there, third there. Maybe you move your stop loss from here or up here somewhere to your entry. And maybe you wait for the first div or something like that as your exit. So, you know, maybe that was your last exit. Or maybe you wait for the first div, which was here, for your last exit, to squeeze a little bit more juice out of the market. So right here, where is it? Right there's an extra 1.56%. Not bad at all on top of the one. So that's actually 2.56 or thereabouts. So I guess you kind of get the idea. I will quite quickly show an example of something quite risky, but you know, something that kind of worked out. So that would have been trading, counter trend trading. Quite clearly here, you've got a big spike up here, price action, and then a lower high. Your stop loss is in a really dangerous spot. So in this case, you would probably have moved on the third take profit, moved your stop loss to entry. So as you can see here, div coming down, price action coming down. That's your entry there. You know, profit point 1, profit point 2, profit point 3. At the third, at the very least, you could go the second one, but then you would have been stopped out here. Basically, you move your stop loss to risk free. So your entry, I guess, depends on how you want to manage your risk. And then you would have been stopped out right here before price went back up. Because this right here, that probably would have, I mean, it's only the last quarter, but still, that would have taken out a lot of your gains in this trade, which would have really, really sucked. Okay, and here is a counter trend, I guess. Not really, because you've got, it's a higher low. according to this. So you can see I've got a trend line here that's drawing these. Not really counter trend, it's counter to this tiny little trend here, but kind of catching the bottom. So we have low, high, low, high, low. It's 3-div chain actually. So the second high low here, we have a high, low, high, low. Price action's doing the exact same thing. We're just following. If these are doing the same thing as this, then it means something weird's going on and it's time to get in long. So that's your entry there. Again, boom, 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 boom. Or first div, which was up here, which was all the way here. So that's pretty nice. Here is where it failed. So we have a entry here because we've got a low, a higher low on the price. We have a low, higher low on the div. Although this is kind of messy, but you know, you took this, if you took this one, then these are kind of nice and clean, but they're still a bit messy here. It's a bit much nicer when you get these clean price moves, I guess. Sorry, I just realized I was tilting my head to the side. So basically, if you entered here, maybe you got that first 1%. Depending on where you entered, maybe you entered on the actual candle close, or maybe you got in a little bit below it, which would have actually got you that 1%. Otherwise, you would have stopped out here at the very least, possibly here, you know, or wherever you decided to put your stop loss, maybe a bit below it. And it just was kind of, it didn't really do anything and kind of came down, and then we got this at least to make up for that. So I guess it wasn't so bad after all if you just followed the strategy. Now I have to zoom out and try and find the next one. Maybe it's beating a dead horse at this stage, but you know, so there's the next one. Entry on this candle. This is a counter trend because quite clearly you can see price is going back up. This one is a bit more risky, going against the trend. Again, trend is your friend until the end. So basically, profit point here, the first one, second one was here. Maybe because it's a counter trend trade, you decide on the second profit point to move your stop loss from all the way up here, down here, and then you get stopped out there. Well, probably, I would say right here, which would have been fine because that's half your trade out, essentially. Or maybe if you did leave it here, you would have been stopped out there. That's a long time for your trade to get invalidated. Generally, you want things to just start running. Because if it doesn't start running and it just goes sideways for ages, well, it's going to probably turn around on you. But you'll have to use a bit of observation on that one to work out, you know, if that's going to work out for you, or if you think it will work out for you or not, I suppose. And that'll just come with looking at these price action or these moves constantly. Is after a while you'll be like, yeah, this is going to work, or this is probably not going to work. Especially if you enter and then price just kind of consolidates, goes sideways, and you're trying to counter trend trade, then probably pull the pin, I would say. Or maybe you just wait and, you know, let it stop you out. It's up to you what you want to do. But at least in this case, you had some profit taken, so you probably wouldn't have stopped out with some profit. And here's another example of, you could call this probably counter trend because it's going up the higher highs, higher lows, and then you're deciding, okay, we've got a divergence here, price action coming down, divs coming down, so you go profit point, and then maybe because it's a counter trend trade, you move yourself to risk free, get stopped out there, or maybe you're crazy and you didn't put a stop loss in and you got here and here. I don't recommend that, because this here, this fake out, that would not have, that was a 1% worth price move. So there's no stop loss you could have possibly put in here that would have not been hit, most likely, unless you used something like average true range or something that's kind of a bit more advanced. I reckon that would have been stopped out too. Here's another one, long. You can see all profit points were hit. Then maybe if you waited for the next div to take profit, you would have probably closed the last quarter here. So again, 1, 2, 3, wait for the div, and then close up here. Especially if you see this crazy price action, and you're just like, well, I'm gonna actually like get a little bit more out of this, I suppose. And then you got an extra, probably here, I would say an extra 3%. Pretty crazy. At least that makes up for the loss that comes later. And this one here, counter trend, probably one of these ones where you'd want to get in and out. Entry was here, so there's your div, price coming down, divs coming down, profit point, risk free here, and then stopped out. I would say you would, if you just like left it and you got stopped out, sure. But if you see this here, and this is trading with the trend, so higher highs, higher lows, then basically you bail from this essentially, and you get in here. So you just go, you're basically riding this stand down, taking profit from this, riding this up, taking profit from this. It's pretty crazy, to be honest. Okay, and then you see there's another one here that stopped you out, counter trend. Unfortunately, it doesn't always work. More often than not, it won't work. So you would have been stopped out here, or maybe if you doubled the candle size, which would have put you here roughly, you would have been stopped out there. Definitely would have sucked, but you would have made the money back here at least. And then here, if you were awake. So I guess I'm going to show you these last two, just because I really probably should. This is the sort of thing that can happen, where things are kind of consolidating a little bit, going sideways. There's no real trend. A lot of the time it's after a big drop or something. And so, you know, you had a entry here, and then you got stopped out. And then you had an entry to short here, apparently. See here, price is coming down. Is it really though? It looks like price action is going up more so, but it's like from here to here is a lower high from here. So if you entered here, you would have been stopped out right there. And then, okay, you're like, all right, let's do this again. I guess wait for the next entry. So lower high on the wave trend, lower high on the price action. But you see like there's higher lows up on the bottom side. So anyway, you get stopped out here. So what did you lose? You lost 0.5%, and then you lost, let's say here or above, a bit above, maybe 0.7%. Okay. Yeah, that would have sucked for sure. But then you had another loss here that would have sucked, and then you had a win, and then so on and so forth. This was massive manipulation. I don't know if anyone was watching this. This is when the inflation figures came out, where the inflation figure went up, and what happened was when New York session started, the price dumped, and then the classic, you know, 1 hour into New York session, they just reverse it. So price dumped when New York session started, an hour after they started, which is here, they just reversed it. That's one thing to always keep an eye on. And now we come to the conclusion of the video. So extra considerations, we have some extra considerations that you should probably consider when setting up your trades. So risk management and stop losses, covered that in the video for sure. Higher time frame, RSI, stock, support and resistances. So that's your horizontal resistance lines, using those for like profit points, and how overbought or oversold you are on a higher time frame, like an hour, for example. Fundamental analysis. So that's, for example, right now I'm not really trading because of all the crazy stuff that's going on now. We've got earnings, where earnings, I think, will come in at well under what the projection is for a whole bunch of different tech companies. We're correlated to tech, so we may be negatively affected by it, although I think everyone knows that the figures will come in under, so maybe it's been priced in, but that remains to be seen. I mean, price action's been doing alright. Anyway, that's fundamental analysis. And contradicting signals, which I also covered in the video, where if you see a signal and then another signal, the one that is going with the trend takes precedence over the one that is counter trend trading. Managing emotions, well, that's not that easy to talk about in one easy sentence, but that's definitely one. Start off with a small amount of capital and test for at least a few weeks. That's very important. In fact, most strategies you should be testing for at least 100 days, so it's a long time. Stop loss hunts are common, which I also showed in the video. Okay, so this was part 2 of the day trading strategy video series, brought to you by me, Kryptolytix. So hopefully you learned something from this. If you did, please make sure to leave a like down below, comment and tell me what you liked about it, or give me some criticism if you wish. Happy to hear any comments, basically, from you guys, because I would love to hear what your thoughts are on these strategies. Remember, none of this is financial advice. And if you like this, please hit the subscribe button and the notification bell too, so you can get alerted to my future videos. I have a few other videos of this style and this nature that I will bring out, and then I'll move on to what I'm currently working on, because my current strategy is a lot crazier. than this one even, or even the 3-div chain one. But it's good to get the basics down first, and also show in the future a really cool strategy you can use with FTX, where you can actually make it so as soon as you enter a long or a short trade, automatically your 1% profit points will open up and the stop loss will open up, and you can just adjust it accordingly. That will come very soon, so keep tuned for that, because that uses what's called the quant zone, which is a really cool tool that FTX provides that allows you to actually program in limit orders and stop losses and all sorts of other orders as well. So keep tuned for that.